This is the presentation for Group 8 in Session 2. We'll be looking at two sets of currency pairs. The first one will be the Australian dollar against the United States dollar, and the second will be the Great British pound against the United States dollar. Now we'll be comparing such economic factors as interest rates, inflation rates, and annual growth. But more importantly for these three particular nations is the way that their political climate has changed or will be changing over the coming weeks. And politically, that is going to influence how the economy is operating and how the currency is interplaying with each other. We have the upcoming United States presidential election, which is of particular importance in terms of stability and analysis. But when you're looking at all three of these currencies, and we have the recently appointed Australian federal government and the leaving of the United Kingdom from the European Union, which will also play an enormous role in the coming weeks and months in how these currencies are traded. I'll start off looking at the United States dollar. It's according to the World Bank, the second largest exporter of world goods. So probably the largest economy, or one of the largest three economies in the world on a yearly basis. Although recent trends have the cash rate going down, cost of money going down. The current Federal Reserve interest rate is between 1/4 and 0.5%, which means it's a lot easier to get money in the United States at the moment than it has been previously. The inflation rate has been lowered as well over the recent years. However, Wall Street Journal does state that the inflation rate has been rising. Consumer prices are going up again, and the federal government states that inflation is at 1.1%, but it's actually more like 0.8%, according to most industry analysts. Now, that would suggest that the cost of the dollar is quite true and shouldn't be shifting dramatically in either direction. But if inflation is going up, we need to look and consider that in relation to how the Australian and Great British pound are performing. It's obviously an enormous economy, so no surprise that the annual growth is somewhere between 0 and 5% annually. Last year it was 2.4%. And when you look at a country a nation the size of the United States, obviously the annual growth is going to play an enormous role in stabilising the currency. There isn't going to be a huge amount of volatility in how this dollar performs when comparing it to other countries, unless you look at our external factors that aren't necessarily economically at play, such as the presidential election that will occur this year in November, which is a different presidential election to most. Certainly the dichotomy between the Democrat and Republican parties is going to play a role in how people view the stability of this election, and the outcomes of it may dramatically influence how the dollar performs. Yes, importantly, the stability of the dollar is going to depend a lot on how the presidential election plays out. Forbes has stated that a Republican victory would bring certainly greater change to economic and monetary policy than a Democratic victory, and how they influence the rate of cash and how the economy operates generally will certainly play a role in how this currency trades with currencies like the Australian dollar, which already has an elected federal government, and the Great British pound, which is going to have some turmoil or some tribulations of its own over the coming few weeks. Now, generally, a presidential election is accompanied by a stimulation in the economy. Certainly, buoyed economic growth or expectancy grows with a new president and change. But I don't know if we can rely on that as much when we talk about this presidential election. Certainly, the instability or the unknown that's coming with this election is going to play an enormous role in how that dollar continues to perform. Now, in a currency that's generally so stable, we're looking at a very minor factor, but this factor could be particularly influential when we compare it to dollars such as the United States dollar with the Australian dollar or the Great British pound. Each is going to have their little roles to play, but politically, this is a dollar that's going to undergo some changes over the next couple of weeks and months. I'll hand you over to my teammates to discuss the Australian dollar and United States dollar and the comparison between the two.
Hi, I'm Jackson, and for this part of the video I'm going to be discussing the changes in the Australian dollar against the US dollar, the factors that influence these changes, and what's to come by the end of 2016 into 2017. So, over the past year, trends show that the Aussie dollar has moved up and down against the US dollar, however has appreciated on average. As you can see, the most part of the appreciation of the Aussie dollar against the US dollar occurred during and as a result of the election in early July. These effects are likely to continue through the fourth quarter of this year and into 2017. Despite Australia's recently sworn-in government, there are also other factors expected to affect the Aussie dollar against the US dollar. The value of commodities such as iron ore, coal, and uranium have continued to decrease, according to the Department of Industries, Innovation and Science. For example, Australia's largest commodity, being iron ore, is expected to decrease by about 0.6% from 2016 into 2017. This will increase the chance of a depreciating Aussie dollar against the US dollar. However, contradicting this is the above-trend non-mining exports such as education and tourism. These exports are expected to be further increased due to recent policies being introduced as a result of the election in July, and this should stimulate economic growth and influence further appreciation in the Aussie dollar against the US dollar. Another factor is inflation. The current rate is sitting at around 1.1%, which, much like most of 2016 so far, is the lowest rate in 17 years. This year the rate has decreased about 0.2%, and these inflationary pressures, as well as the upcoming presidential election in the US, is likely to cause the exchange rate to slump. However, today's CPI does not demand a further adjustment, especially with non-mining GDP above trend. So overall, the Australian dollar against the US dollar is expected to continue in its current trend due to conflicting factors. So the above trend non-mining exports such as education and tourism and the recent election will likely cause appreciation in the Aussie dollar against the US dollar. However, the very low inflation this year and the decrease in the value of commodities can cause a depreciation in the Australian dollar against the US dollar. So therefore, we should expect a consistent trend or maybe even a slight appreciation in the Aussie dollar by the end of this year.
Hello, my name's Hayden, and I'll be talking about the GBP for Group A. The GBP is basically an acronym of the Great British Pound, and it is the currency of the United Kingdom. It currently has an interest rate of 0.25%. It has a rate of inflation based on CPI of 0.598%, and it has a GDP annual growth, according to the World Bank 2015, of 2.4%. Now, the comparison between the GBP and US dollar is also known as a major pair because it is considered one of the most heavily traded currencies in a forex market. The GBP is behind the US dollar by 0.25% in terms of interest rate. It is 0.237% behind US dollar in terms of inflation, which can be caused because of the transport system and the increase of transport and also the lower price in food, while lowering prices for housing and clothing have weighed inflation with an average of 2.6%. Now, according to Joanna Toribal from Trading Economics, the GDP in 2009 was at an all-time low because of the global financial crisis, but slowly recovered with a 3.5% in January 2015, but slowly declined during the period of the British exit, also known as Brexit, but currently have a GDP annual growth rate of 2.46, which shows a slow progress recovery in such a small period of time. In the first quarter of 2016, the UK's economy has expanded by 0.4%, and this is because consumer spending was the main driver of growth during the period, while business investments shrank more than expected, as well as the decline in exports. In terms of exports, UK exported around 472 billion US dollars in 2014, making it the world's 9th largest exporter in the world, according to the Observatory of Economic Complexity. The most recent exports are led by cars by 9.7%, gold of 7.9%, and crude petroleum, which is 4.9%. In terms of imports, UK have imported 663 billion US dollars, making it the world's 5th largest importer in the world. Imports have included cars, which is 7.1%, crude petroleum of 5.1%, and refined petroleum of 4.2%. On June 23, 2016, Brexit, also known as British exit, was a referendum where the British voted to withdraw from the European Union and will not share open borders with a number of European nations. This referendum roiled global markets, including currencies, which caused the British pound to fall at its lowest level. The choice of Brexit will slow the economic growth of the country, as well as a decrease in jobs, lowering pay, and very high unemployment, And with this fallout, companies will hire few people and consumers will spend less money. Now, the Bank of England also voted to hold the bank rate at 0.25% interest in order to bring inflation back to its 2% target and to support growth and employment. According to The Guardian, it states that the British inflation rate has hit its highest level since November 2014, with a rate of 0.6% thanks to a rise in alcohol, transport, and hotel costs. Now, these rises in the goods would also affect tourism levels because of its high cost to meet such demands. The choice of Brexit will also decrease the GDP even more after the UK have voted on the Scottish independence, which is earlier 2016, end of 2015, which created the pound to lose such significant value, which dropped the exchange rate. Now, a video from the Times magazine showed different responses from political leaders around the world. Barack Obama, the president of USA, stated that the relationship between UK and the United Nations, or the European Union, will change, but our relationship between the UK will not change. It would still remain the same. Vladimir Putin states that it is the UK's decision and the Russians will not interfere with this decision. Hua Chunying of the Chinese Foreign Ministry spokesperson said that they respect the choice made by the UK and attach great importance in developing our relationship with the UK. The French president, Francis Hollande, said that it is a painful choice and I regret it profoundly for the UK and for Europe. In conclusion, it is clear that the Great British Pound will depreciate against the US dollar, but not by a large significant amount. According to statistics provided by the pound sterling, pound to dollar exchange rate was at a 4.9% but dropped to a 1.3150, which is down by 11.74% on the 23rd of June, which is on the exact same day when the British signed the referendum to exit the European nation.